structure of silver on monthly time frame. Let me show my face. For a long time I've not shown my face, and so let's see how it goes. So on a monthly time frame, I want to see the structure of silver, and we are having structural deficit in silver due to high industrial demand from PV, AI data centers, and the military requirements. So silver price action is looking promising. After on a monthly time frame, we have seen price on a monthly time frame create a resistance structure here, one, and another resistance structure. These are around 1980, 1980, 1979 price action. This is a monthly time frame, and we return here in 2011, break of structure, and we are back on demand. So it looks like the bulls are going to defend this level, but technically it doesn't, it shouldn't disappoint at this level due to the current deficit we have for silver. We have serious deficit in silver, so the demand is still very high, and its price needs to be recalibrated so that it could step up. So technically, that's one aspect of it, and another aspect to look at is the current structure here, where we have a clean break and retest on monthly time frame starting from 2002. So this is pure logical trading. It's a strategy never seen before, but at the end of the day, we are going to see if it addresses the market holistically. So this is what we have after breakout from uptrend, and followed by a retest, and if we take this out, you'll see that price reacted there perfectly as a retest candle again to a broken structure, and that's one aspect which I have. And I have another one, RT slash RS. So after that break of structure, we have, let's see, RT RS at the zone, and this is the breakout. You have a clean monthly break and retest at that level, which I call bar. And from the top, these are all RS resistance become support on break of structure. RS1, RS2, break of structure, price returns here as RTSR. And there are so much going on in the silver market, and I'll tell you for free, there is a very high probability that price could hold at this level as the new demand floor. Technically, it makes a logical sense that after price created resistance structure 1 in 1980, resistance 2 in 2011, breakout of structure in 2025, and we come back here either as bullish continuation or breakout structure. This is what I expect. And another thing to look here is yes, price could silver could rally into 150. Very much possible if it moves again based on the structure on monthly time frame. Yes, you can see the calibration here, breakout of structure followed by a retest, and it was a wrap. So if price returns into that structure based on the distance of travel, it's exceeding the previous high around 120. The previous all-time high was 120. the market is mathematically calibrated. I know a lot of people have not had this before. This is not it's not an English thing. It's not about who speaks the best grammar. It's for you to understand the mathematics of trading. Trading is pure mathematics, and if you begin to view it from logical perspective, view it from mathematical angle, you understand what I'm saying. Look at the calibration. Turn on your line chart. ROS1 in 1980, ROS2 in 2011, break of structure price comes here. Most likely based on a break and retest on the monthly time frame, price should pull back from here. We should have a buyback from this area. It is a monthly candle, and the monthly candle is still fresh. So we could have a liquidity grab. We could have price trying to pierce the structure. And maybe when FOMC comes on 27, 28, you see price pull back, and the next month opens and you see it becomes a move back. So the new candle is going to open after this month candle peak liquidity and go up. So it is also possible that silver may come down a little bit, and the upcoming fundamental from FOMC, which could be a major market driver, will set a bullish directory for it. Yeah, because that's the way I'm seeing it. That's the way I'm seeing it. And another calibration again, which I also want to put out is if you see here, you see we have another structure here on a line chart close. There is a price forming a double top, a bearish price action after price way back. This is close to 40 years. This price action is getting to 50 years. It's a 50 years price action of gold. So it's a holistic research work in the price movement of gold. And if you look at the structure, you will see, I also want to put it into perspective. You look here, price create a double top structure. That's a double top structure. One leg, second leg, neckline, break of neckline here is a bar. And I'm also going to bring that and put it. If you have a divergent view, please come to the comment section. If you have a divergent view, you're allowed. So we have here as a retest after break of structure, and price returns here as a RTRS. It's a retest candle, and as well resistance becomes support and break of structure one, and resistance become that gave birth to this resistance here. So that technically it is the price action here in 1984, 1983, 1980. It's a double top structure. After that break from that double top, price came down on the neckline, formed another double top, a bearish drop, was what gave birth to 2011 resistance, that ascending trend line, ATL. Let me put that up. Let me put it up for reference. So this is a must-watch video for any metal person. If you are into metals, this video is a must-watch for you. So that's why I show my face. You see my face, see my face. So now the next thing is how we're gonna look. We're looking to see possible structure that let's see where we'll go from here. We have a structure here. This was where market went full parabolic after break of structure. You have seen break of 28, market leveraged on there as a demand floor. In the same principle, break and retest a monthly TF, price creates series of resistance, break of that resistance structure, price form whatever it forms here, break of the structure, retest one, retest two, and when price return, it broke a previous demand floor broken, becomes supply roof, and it return as a demand floor, and is technically and logically a new support structure. So if this market pulls itself back into the structure, this is a valid buy floor, $27. So price could form a W structure and you get an outright reversal to the upside. I don't know if this is gonna come, but silver is about to go parabolic. The structural deficit in silver, it's most likely a strong bullish catalyst, which I see that the industrial demand is most likely. And when we look at the softer than expected US CPI and PPI data, these are most likely going to affect the US dollar. And anything that makes a rate cut or maybe rate hold, that could actually be the moment silver is looking for. Besides, you see silver is lining the prices now on a monthly support after bridging two resistance structure in time past. Over 40 years, price have built this trend and we are back here in 2026. What a good time to be alive. What a good time to be alive. Price create here resistance structure on a monthly TF, another resistance structure on a monthly TF, and it's still broken. So this is a psychological trend line. This is a pure psychological trend line. So a breakout of that structure would be a bearish continuation. Here we expect a reversal, but the monthly candle might pick liquidity a little bit below it and the price will move up. So on structural deficit, I remain bullish on silver. Yeah, silver on structural deficit, I remain very, very much bullish. Industrial use make about 50% of silver and also safe haven assets, very high demand. So some of the bearish factors we could be having is if Federal Reserve happens to increase rates, which the parameters for rate increment have not been met. So for now, we think that we are on a data wait and see approach. So we'll continue to see. I don't know what Kevin Walsh and his team are going to do, but I know the rate increment will not be based on speculation. It will not be emotional. It will be based on data. So I think technically for silver, we have gotten a very strong structure for that. And what I see here is, if possible, that price can pull from where we are. And one more structure which I see, it's going to be somewhere around here. And shortly after that, call it a quit. Call it a quit after here. You see a structure here. The market is mathematically calibrated. When I say mathematically calibrated, it's based on evidence. And I can challenge anyone on the mathematical calibration of the market to come up and challenge my thesis. The market is mathematically calibrated, very accurate, very precise. And let me put another thing to buttress my point. Here we have resistance in 1968. A lot of us were not born in 1968. I was not born then. And a break of structure. In fact, it's not the first time silver is rallying. In 1980, silver rallied up to $35 per ounce. That was not the first time before the collapse of silver. And this is a new era. And silver is about to go full parabolic. If you are seeing silver above $1,000 per ounce, don't be surprised. If you see silver $2,000 per ounce, don't be surprised. There's going to be a new revaluation in the metal market. Gold is going to be revalued. The People Bank of China, the Industrial Bank of China, and I will tell you, this is it's not a secret. They are trying to rebase Chinese yuan. If Chinese yuan is rebased and the value is backed by gold, of course, in recent times, the Chinese central banks have been encouraging its citizens to buy physical gold. I am not saying paper gold. If you have a paper gold, you got nothing. You know, paper gold is open to manipulation by big firms, by hedge funds, making money out of it. So anybody can place contracts and they can sell whatever without, yeah, they know for sure that there's no time everybody's going to request for a physical good. So paper contracts can fly as much as possible, buy, sell, it's a paper thing. And at the end of the day, the physical goods are not being sold. So if everyone demands their physical good, then you could see gold 10,000 per ounce, 15,000 per ounce, 20,000 per ounce. So gold is also going to undergo revaluation. Yeah, the same way silver is going, that's the same way gold is going. So look at the market calibration, price return here as a resistance, price returns here as price returns here as a support structure, and after break of support structure, play a series of resistance. On that roof, we can see what price has done here. You see price returns here, and we play another here as another resistance structure, and we have another structure here, and break of 3 SR level, I mean 3 RS level, and you see price returns here as, oh, so price returns here as a support structure after break of structure, and you can see price returns here. One, RTSR1, RTSR2, final buy confirmation on monthly time frame, and the price has gone. If you are a silver person, make out time to watch this video. Very insightful, very accurate, and the price actions are detailed, very accurate. The calibration, the mathematical calibration are top notch. It shows that those who are controlling the silver and gold markets are mathematicians. They are trading silver and gold with mathematical strategy. So if you are trading silver and gold with just your bare hand, you could likely miss the beauty of the market. You need to bring in mathematics into it. This is why Fibonacci extension even works at the first place. So there are Fibonacci traders and those who have mastered use of Fibonacci and other mathematical strategies here, those who are using Elliott wave. These are all mathematical strategies that works very well in this. I'll tell you for free, trading is mathematics, especially when you are trading things like gold and silver. So this is what we have for now, and I stop here, and let's see if the structure do exactly what we want. A pull out from here will most likely pull silver into $30, $29, where we see a strong demand. But from where price is, I can tell you, you can use the price action of silver to trade gold. Very much possible to use the price action of silver to trade gold. They both have the same demand and they move almost in a similar way. You know, the way silver begins to move, silver is traded in USD, gold is traded in USD. So if most times the gold price action might not balance very well, but silver might provide the insight. So you can use the silver insight to project, look at the movement. And if you check the structure of gold and silver, it's almost like they are doing this thing just for fun. So that's what we see now. And this video is very insightful. So do give me a thumbs up. Let's see what happens. We're going to look at copper. We'll look at aluminum. We'll look at titanium. I'm also trying to look at uranium. I want to look at uranium to see what's going on in the uranium market. So bye for now.